overall, we would seem to be the case that the world entered 2014 on a slightly more hopeful note, on a slightly more promising note. What was also quite notable about the onset of this year is that the West is back. In other words, the impulse for growth this year is going to come from the United States. It's going to come from a Western market. That is mildly astonishing if you consider that this year will be only the second time in 8 years that the American economy has contributed more to global output than China. It's also astonishing if you consider that going into 2014, we seem to be less troubled by the health of Western banks, and we're more troubled by the ill health of Eastern banks, and particularly China's financial services system. So the idea that the Chinese financial system could roil global markets seems to be a replay of the roiling of global financial markets that did occur in 2009, 2008, and 2009, and of course anchored in the United States. But a bit about the detail, even though that perhaps gives you a gist of how we view 2014. The US economy is likely to perform better this year. Following growth of about 2% last year, we think it'll do near 3% this year. That dynamism, that innovation, that productivity that is a hallmark of the American economy seems to have percolated despite government. So America will do well, we anticipate, and as I suggested, it will be a source of inspiration for the world. The Fed, in my view, will be sensible in the way they remove the monetary accommodation, in the way they remove the stimulus measures that have been injected into the world for the last couple of years. I think they will be sensible. They recognize quite fully that during tough times, during stress times, the world does move in a synchronized fashion. In other words, they recognize that the world imploded in a synchronized way in 2008 and 2009, and the world recovered in a more or less synchronized fashion in the immediate aftermath. The world tends not to move in a synchronized fashion in more benign times. People tend to think because the world is a global village, it will move in a co-movement way, but that's not the case. In benign times, as I'm suggesting, it moves. Well, capital will flow through financial linkages to more potent markets, more productive markets. But during stress times, the world tends to move in a synchronized way. So the Fed is really acute that even though they're scripting policy for their market, it will have enormous influence and with more pronounced downside impact if they were to remove that accommodation too hastily. Across the Atlantic, even Europe seems to be emerging from playing its role as Japan, serving as a drain on the global economy. So following 6 quarters of contraction, in the latter half of last year, Europe began to grow again. It's not likely to be fervent, probably close to about 1% growth this year, but that is a notable improvement after having contracted by about 0.5% last year. There is some constructive improvement in a variety of nations. So for example, those peripheral nations that have weighed heavily on Europe and maybe the world will see their fiscal deficits halve. In Portugal, Italy, and Spain, we've seen material improvement in their current account deficits. It is likely that the European Central Bank, unlike the US, will have to re-inject stimulus, will have to perhaps lower interest rates even further. Europe is only in the incipient stages of recovery, and it probably requires further monetary policy tonic. If we shift over to Asia, and specifically to China, we know well that China is slowing down. And it is not so much that China is slowing down that is of concern, but it is that China is slowing down more than markets have anticipated. And so it suggests that repricing for a lower level of anticipated growth is going to have impact on a variety of prices, on a variety of markets. So China's had an incredibly boisterous level of performance for a length of time. And it is a pace of growth that one has to respect and admire. Over the last 30 years, the total number of people living in poverty has fallen from about 2 billion people to 1.2 billion people. So a decline of 800 million people that would have been living in poverty. And by poverty we define that as individuals living or existing on less than $1.25 a day. What is astonishing is if you consider that 95% of the decline in poverty is singularly as a function of China, of Chinese moving up the income ladder. So China's economic policies have delivered enormous traction in terms of improving the welfare of masses of people, even though there is still much more to be done. But China's quality of growth in recent times has waned. It has become inefficient. Asset markets have mispriced or have founded mispriced risk, have been based on mispriced risks. And more recently, financial instability has crept into the Chinese economy. Notably, fixed investment, even though it has been lively for a length of time, last year was around 50% of GDP. Well, clearly a high level of fixed investment is required to sustain growth, to give it an enduring flavor. Even at that high level, it probably spawned white elephants, assets that may not entirely have been necessary, or assets that may have been misplaced in the required cycle of that economy. We also know that credit has risen to about 2 times the size of the Chinese economy, an incredibly high level. And a great quantum of that credit may also have been misallocated. Local governments have been quite activist in recent times in allocating capital or being the mechanisms, the channels, the pipes to distribute capital into that economy, and probably to projects and their prices that were not appropriately calibrated for risk. So China is going through that transition that has already been in the making for some time. 5 years ago already, the Chinese suggested that they would seek to shift their economy to being less dependent on exports and investment and increasingly harness domestic consumption. But of course, that has been slow to come. It is going to be incredibly difficult for the Chinese authorities to finesse that transition, to shift the bait and say from investment to consumers. The consumer cycle in China is still an embryonic one and is likely to be volatile. And especially as the Chinese authorities seem to step up the marketizing of the economy. In other words, increasingly leaving it to market forces to drive the economy.